Hello friends, real estate. Today I want to talk a bit about real estate and how people make their investments and what works and what doesn't work. Over the last 20 years, I had the opportunity to work on more than 7 real estate deals: land, apartments, commercial real estate, agricultural land, land in the city, and I learned a lot. I see many of my friends, they all they go about is buying houses and land and plots and other things. Uh, Initial investments that we did, they have worked quite well, especially the investments that we did before the year 2010, uh, where we got 4 times, 5 times returns. But the investments that we have done after 2012 haven't done that well for various reasons. Actually, if you see last 10 years, the real estate almost hasn't returned anything. If you had bought a house for say 2 crore rupees in 2013, today also the price is 2 crore rupees only. Meanwhile, if you do the calculation, there's time value of money, there is currency depreciation, there is cost of capital. If you account for that, everybody who invested in the real estate in the last 10 years, not everybody, many of us are sitting on huge losses. Let me give you a simple breakup. Had you invested a house for say 1 crore rupees in 2012, 13, 14, or any time in the last 7-8 years, the value of that house probably is still 1 crore or sometimes even lesser. But in the same time, had you invested that 1 crore rupees in a bank deposit, or that would have become around 1.4 crore. Had you invested that money in the stock market, which I don't recommend always, that money would have become at least 2.5, 3 crore. Had you invested that money in say government fixed deposit or national savings certificate, that value would have gone up to 1.5 crore at least. Look at the math of this 1 crore. The 1 crore you spent, almost 10 crore went into taxes, transaction cost, stamp duty, registration. So 10 lakh rupees, 10% went to the government. Had you taken a loan of say 50 lakh rupees or 60 lakh rupees from the bank, you would have paid the interest to the bank of almost same amount. So 10%, 10 lakh rupees went to the government. 70 lakh rupees, had you taken that loan, that you would have paid the same amount of interest. So 70, 60, 50 lakh rupees went to the bank. The builder works on 40, 50% margin. So the 40 lakh rupees went to the builder. And then for all the painting, leakage, repair, maintenance, furnishings, furniture, you must have paid anywhere between 10 to 20 lakh rupees. Then there is annual maintenance, there is monthly maintenance cost in the building, then you have to pay taxes. So it has been a huge loss-making proposition in the last 10 years. I won't say it always works like that. A lot of people have made a lot of money, but that's how the equation has panned out. Hopefully in the next few years, the real estate will come back and then you will recover some of the losses. Now, the another thing, right, it's very important that whenever you invest, you have to look at 3 important factors. One is the cost of capital, because money also has a cost. If you invest your 1 crore rupees in say real estate, you could have invested the same amount of money in the bank deposits or in your business or in a good quality companies. That 1 crore would have become 2 to 3 crore, but in your real estate, it remained 1 crore only. So there is an opportunity cost and there's cost of capital. Basically, if you go to the market to get say 10 lakh rupee loan, they will charge you 12 to 13% interest. That is actually cost of capital. So if you wherever you invest, you have to really look at cost of capital, how much the money costs, right? And if you're not generating a return higher than cost of capital, you're in a big loss. The second thing is time value of money. every year when you, the money loses its value with time. Something that is worth 1 crore rupees today, because of inflation, because of other things, the goods you will buy in that 1 crore, next year you have to pay almost 1.1 or 1.2 CR, because the value of money has gone down, because there are other factors, the currency has depreciated. So if you're buying a house for which you will get a possession in say next 5 years, and you're buying it for 2 crore today, actually you're not paying 2 crore for that house, you're actually paying more than 3 crore in the, because you will get it in next 5 years. For the 5 years you are paying interest on that capital, there's cost of capital, there's inflation, the value of money is going down, so you're paying much higher amount for that investment. So the time value of money is also important. The next important thing is inflation, right? Even if you don't do anything, because the value of money goes down, your 1 crore today is worth 80 lakh rupees next year, because the price of food goes up, price of fuel goes up, the currency depreciates. So if that inflation is also beating your savings. In fact, for the last many years, the inflation is, official inflation is 8 to 10%, but actual inflation, the individual inflation is much higher. So you also have to account for that inflation. And then you have to run a nice model in an Excel sheet to know actually how much money is going in at what point in time, and how much money you're going to get out of it over time. And that involves building a model and doing the calculations. I'm not saying you shouldn't invest in real estate, but what I'm saying is you should do the homework so that you are clear about the numbers, and you know how much money is going in and how much money is going to go out. This is just on the money side, but you also look at other things, right? Many people who invest in land or flats or buildings, right, they never get possession because they get cheated, and that's a huge risk they take. And some areas don't get developed. I had to deal with so many stupid neighbors and stupid societies and the politicians and the builders who wanted to grab our land, right? So you have to understand this whole picture before you make any investment, and make that informed choice so that you stay out of trouble and your money works harder for you, and you enjoy the benefits of your hard earned money, and you don't get cheated. There's a lot of knowledge available in this area. In fact, we can do a very exhaustive session on this topic, besides how you build your portfolio, how do you reduce risk, and how you make your money work harder. More about that in the later sessions. Thank you. Hope you found it useful. And let's keep learning, sharing, and growing.